Selling a cell tower lease is a lot like selling the roof on your home while keeping the rest. And it can work out really well if you know what you're doing, which is what we're going to talk about today on the Furlo Capital Real Estate Podcast, because I am in the middle of some of these discussions, and it is crazy interesting of this world of cell tower leases. And our goal in this conversation is to help equip you to invest wisely. And so that, invest wisely so that we can invest and so that we can build wealth and improve housing at the same time. Oh my gosh, I'm on a streak. I literally just practiced it before we got on. It was totally fine, but that's okay. That's what it is.
You can do like a
Anyways,
take.
I am James, and this is my wife, Jessie.
I was actually hoping that we were going to talk about how puppy training is like real estate.
Oh, yeah.
Because that's all I can think about right now. We're in the middle of puppy training. We just did puppy class. My head is exploding with all of it. Like, the most impressive thing, this has nothing to do with anything podcast related.
Okay.
Well, maybe it does. I don't know. The most impressive thing was the teacher, has a dog, obviously, and she's been doing classes for 20 years or whatever. And, she flexes at one point, and it's just look what you could get to, people. Yeah. And the dog's just she's like, sit, back up, stay, lay down, tidy up your toys. And it does. The dog
roll
does
over,
all the things.
wave.
Yeah, roll over.
Yeah.
All
it
the
was
things.
Cool.
It was very cool. My Eleanor was just like, what? I didn't even know dogs could do that.
Yeah, I'm just happy that our puppy walks around the block without a leash and stays with us. That's pretty fun.
He comes when we call
He
him.
plays fetch, so, yeah.
But yeah, my bar is a little lower.
Which is totally cool.
Doing a bunch of tricks, but.
Yeah. I am currently in a situation where I'm learning that my bar needs to be higher than what is normal. I can't give a lot of details about the deal because there's regulations all around it.
Interesting.
But I want to talk about one aspect of this deal, which involves some cell tower leases. So looking at this building to buy it, and it has some cell towers on top of it. And I have been learning so much about it. And part of this is me externally processing everything about it and just kind of sharing what's been going on. So for this particular building, there are 2 cell towers that are on it, one of which is AT&T, the other is US Cellular.
Okay.
One of the things I've recently learned, so these 2 companies essentially got a lease for part of the building to build their cell towers, and then they pay a monthly fee.
So it's not like they own the roof or own part of the building. It's as if the roof were an apartment and they're leasing that space.
Yeah.
Interesting.
Yeah, or not an apartment, but like an office building or industrial building or something like that.
And then they just so happen to use it to put their cell towers on.
Correct.
Because it's high.
Correct. Yeah. Yeah, exactly.
There you go.
Yeah. So
Weird.
It turns out that there are companies that are willing to buy those leases.
So why?
I haven't fully figured that out yet.
Because currently, or the way that it typically would work is the building owner would have the lease with the cell company.
Yep.
So it would be a third-party company.
Correct.
That
so the
holds
idea,
lease with them?
So essentially what it is they buy an easement to the roof. And so
Weird.
I own the building,
Yeah.
but they essentially control the roof and everything on the roof, including any leases that might be associated with the roof.
What's the benefit of the building owner to do that?
They give you a lot of money up front.
Well, up front, but then ongoing, you lose the money that you would get from the leases.
Yeah, that's true. But with the time value of money, it's more valuable to potentially get it up front than it is to wait the 20 to 40 years to collect the funds.
Interesting.
Yeah. Now, so what some of the companies do if they're smaller, they'll buy it from you and then they'll roll them all up into a bigger package and then they'll resell that package of cell tower leases to other really big companies.
Got it. So that's lease or cell towers on multiple buildings with multiple leases.
Correct.
And they just kind of bundle it all together.
Correct. Yeah. Or they've got some sort of economies of scale that they can do where their profitability is better. They can buy it from me at retail and essentially operate it as if it's wholesale because they have a bunch of stuff.
That kind of makes sense. For example, if you had one property and you were going to manage many others, it's a scale issue.
Yeah.
So it's okay, if we have 50 of these things, the maintenance like on one is the same as on 50,
Yeah.
so we can hire
Or
a guy. and
another way they
does
do it
for all
is
of
they
them.
essentially they buy it at, from what I can tell, it's like a 12 to 15% discount.
Oh,
And so, I mean, you don't see that money until the end.
Right,
But they're
but
like,
they're
hey, we're in it for the
gonna
long
hold
term.
on to it
whatever.
forever or
Yeah.
whatever. Yeah.
And that's there they go. Yeah, we make 12% on our money. And it's just what it
Interesting.
is.
that's super interesting.
Yeah.
I had no idea that was a business.
Me neither. Me neither.
Okay, doesn't it? I'm wondering if it causes a problem for the business. Oh, well, for the property owner
Okay.
to be working, like to not have control
Mm.
or to lose access. I guess you don't lose access. You just grant access to this third party company. Are
When
there
you say
rules
lose
about
access,
like?
what do you mean by that?
Well, like let's say you had a roof leak or something.
Yeah.
Like you've got to go repair that.
Correct.
Does the lease of the cell tower like prohibit you from getting on there at different times?
It depends
or
on how it's
whatever?
written. Sometimes they are in charge of the roof. Sometimes
Oh.
I'm still in charge of it. Like I'm still in charge of everything below, like making sure
Okay.
the building
Stands
stands
and yeah,
and
is
does
in
all
good
the things.
condition. Sure.
Yeah, yeah. But depending on how it's written, yeah, maybe they take care of the roof for you. You don't get paid as much, but whatever.
Huh. All right. So it's
Yeah.
there's negotiation just like
Oh,
any lease
100%. Yeah.
for what they're
yeah.
responsible for, what you're responsible for.
Yep, yep.
Huh.
Now my plan is to use this lump sum payment as part of the down payment for purchasing this property.
Okay.
So I don't have to necessarily raise as much. It's
Yeah.
it's actually cheaper for me to sell the lease than it is to raise the funds
Okay.
because
that
they only
kinda
want a
makes sense.
12% return, whereas investors, that's like the minimum.
Does the potential exist in the future to buy the leases back? I mean, that sounds weird, but
I'm asking about that.
interesting.
No, in general, like they have to be willing to sell it, and they usually
Right.
don't.
And they typically they're
unless there's
if it's a big
reason for
company,
it.
they could hold on to it for
Now,
a
one
long
of the things
time.
I'm asking for is a first right of refusal to buy that. If they ever
Mm.
do decide to sell, to
Yeah.
at least give me a shot
Yeah.
to buy it back. I may not, but I'm like, hey man, at least
Yeah.
give me the courtesy of keeping it
Yeah,
with me.
letting me know that that's
yeah.
gonna work.
Yeah.
Okay. So it does seem like it has levels of complication that are just like, oh my gosh, like why are we making this so complicated? Like on one hand it seems so
Yeah.
straightforward. It's like we want to rent your roof, we're going to put a tower on it.
Yep.
It's super straightforward. But on another level it's like
Well, so that part's already happened,
right,
Right,
it's
like-
it's
that part's
already
really straightforward, right?
signed.
It's like,
that
yeah,
seems straightforward.
I own a spot, I'll rent you the spot, no big deal.
Which I guess you just have to wrap your head around it as like, okay, you're becoming the new property owner. You are going to essentially this third party company is your tenant.
Mm-hmm.
They're buying
Correct.
the leases.
Yes, that's a great way to think
they
about
are
it.
now occupying
Right.
the roof.
Right. Yes. And instead of them paying like a monthly rental fee, they just go, we'll pay you a bunch of money
We're
up
gonna
front.
Pay you all up front, and then
And-
we get access and get
and
to
then they do
use-
their thing.
Yeah.
Yeah. Yep. That's how to think about it.
Hmm.
There's other places in the industry where this kind of happens. Like, for example, maybe you get a loan from me, okay, and you're making regular payments
Mhm.
to me, and I'm like, I'm getting them over time. But maybe something happens where I'm like, man, I could really use the cash up front.
Yeah.
I can then take that note and I can sell it to a third party person. And now you don't pay me anymore. You now pay this third party person, and they just gave me a chunk of cash up front.
Okay.
So there might be something like, I don't know, we'll keep the numbers simple. I gave you a $100,000 loan. You're making, I don't know, whatever, $1,000 payments, right? Which is going to take forever to pay off, right? And I'm just
100
like,
months.
I'm not willing to wait forever.
Mhm.
And so maybe I go to this person, hey, I'll sell you this note for $75,000. They go, yep, love it.
Oh.
Now they slowly collect that $1,000 over time, but there's a guaranteed profit of 25 grand.
Yeah.
Now, again, time value money is a thing, and so that 75 may or may not make sense given all the parameters, blah blah blah.
Okay.
But it's a very similar idea to
Mhm.
that. There's just this asset that's also
So,
part of it.
Essentially, you're saying you think it's more valuable long term to take the cash now and reinvest it in something else in this property,
Yes.
so that your profits can be better essentially in the future.
Uh-huh. Yeah. Yeah.
Huh. How do you do that math? Like, because I mean, you obviously know how much this third party company is willing to pay for the leases,
Correct.
and you know how much they were currently being leased for.
Correct.
So I guess you could compare both scenarios.
Which is exactly what I did. Yeah.
Huh.
Yeah.
And then it is inevitably different if you have a lump sum of money versus a little bit over time.
Correct.
So
Yes.
your decision making on, like, for example, putting the lump sum towards the purchase price, like, that's different.
Mhm.
The property's more expensive.
Yep.
Without it, even though you might make more month by month. But
Yeah,
it's
so
spread
what
out
it does, so
over a
like
long time.
the big thing is that it actually changes the value of the building, right? Once you get the
Yeah.
cash, you give up that future cash flow. So the NOI of the building, the net operating income, is now less.
Right.
And so I needed to factor in not just, hey, I'm not going to get that money anymore. I'll actually sell the building will be worth less in the future than if I had this contract still in place, because essentially you're giving up some cash flow.
But hopefully you do improvements or other things to make it more valuable.
And the numbers got to make sense. Yeah, exactly. And it's in some ways it's a spreadsheet exercise. So a couple interesting tidbits. U.S. Cellular is under contract to be bought by T-Mobile.
Okay.
And so one of the things I learned in this process is that none of these third-party people want to buy U.S. Cellular because there's all these unknowns around it.
Oh.
Yeah, so like for AT&T, they're willing to pay a 24 to 25x multiple for it, which is good.
Yeah.
Whereas they're more like, well, I'll give you 5. Like it's like nothing to the point where like
Wow.
we're not even interested because
Wouldn't it
there's
be
a
good
high
thing if
probability.
T-Mobile bought
Well,
them?
there's a probability especially in this area where T-Mobile has other towers in the area. So the
Oh, so
question
there'd
is,
be-
will they consolidate or not?
Interesting.
And no one knows. And so when you don't know, you go, oh, I'm not interested in buying.
And so if the cell tower is consolidated, they could potentially drop that
Correct.
lease.
Correct.
Because they're like, we don't need a tower
They
there
just don't
anymore.
renew
We're
it
just going to do
in the
one.
future. Yep.
Ugh.
Yeah.
Which that third-party company could find another cell provider.
Yeah, but that costs money and time and energy, and it's not uncertain. And what I learned is that the equipment is not interchangeable.
Oh.
So you could resell the space.
But they'd have to put a whole new
Yep.
system in.
Mm-hmm.
Interesting.
Mm-hmm.
Wow.
Yeah, it's super fascinating.
I never
Whereas
knew.
had this transaction been happening, I think it was like 3 years ago,
Mhm.
they would have bought both,
Oh.
and it would have been worth.
Because T-Mobile wasn't in the game yet.
Yeah. Who would have known? Yeah, super interesting. So some of that, like, there's some gambling that
Right.
happens there as well. I'm like, oh man, interesting. Other things. So they're technically they're buying an easement,
Right.
which is essentially saying, hey, we want long-term access to this thing.
Yeah.
But not all of them are equal. Some of them are willing to give, it's like a 50 or 55 year. They only want a 50 or 55 year easement. Some of them want 99 years, essentially twice as much.
Yeah.
That's one of the things. There is
Why
like,
does the timeline matter? I mean, it's a long time no matter what.
yeah, it depends again for sellability, right? Let's say I hold on to this building for
Ooh,
20
okay.
years.
Yeah.
There's a big difference between saying, oh, there's only 30 years left on this versus saying, oh, there's
Yeah,
70
it's gonna
years
be for the rest
left.
of your life.
Yeah. And
Interesting.
so it's like, it's not a lot more valuable, but it's a little bit more valuable.
Yeah.
There is, like I said, there's that overall number. Also, these companies are willing to give you payments over time. So they might give you a lump sum, but you could also say, let's spread it out over 10 years. And because of the whole time value of money, they're willing to pay you more for the contract over 10 years because it doesn't cost them money up front to do it.
Mhm.
So there's
That
like,
makes sense.
that's another like little piece to this. Another thing that I learned is, I got notes here of what makes them different. Oh, there's different levels of restrictiveness to the easement. Like I said, maybe they go, we'll take care of the roof and all this stuff.
Right.
Maybe they won't. Some of them have restrictions on me being able to compete with them. Like they might say, hey, you've got an easement, but if you own another property in town, you can't build a cell tower within a mile of ours or something like that.
Wow.
Or something.
Yeah. Whatever.
Yeah. Obviously our interests are all aligned on that kind of thing, but yeah, there's different levels of restrictiveness.
Are there restrictions on how many cell towers can be on top of your property?
As long as the city allows it, no.
Huh.
Yeah. That's another one that I've noticed almost everybody includes is there's some sort of, once they have an easement, in theory, they can go find new cell tower contracts. I don't really have space on mine, so it doesn't matter. But if they did find someone, they do a 50-50 revenue split in the future. Yeah.
So
Because as far as they're concerned, like the hard part's been done, right? The structure's already been built. It's already there, so they're willing to share
so it
that.
is a potential other stream of
potential.
income
Yes.
if they expand.
So
or
now the
whatever.
weird part about it is, and this is where it actually might work out potentially well for me. Like if US Cellular goes away,
Mhm.
we then get a deal with Verizon or something, and they go, yeah, cool, you can have 50-50 of Verizon. So it's not a horrible situation, not ideal, but
Yeah, it's not a
I'd
deal
rather
for
keep
them.
100% of, and they're willing to even say, and you know that 50-50 split, we'll give you a lump sum for that as well if you want. And they'll just keep 100. So there's there's all sorts of stuff that you can do. So in theory, that could happen, and that could go, hey, investors, here's another $200,000. Cool.
Weird. That's so weird.
Or the T-Mobile thing gets all fixed out, gets finalized, and T-Mobile goes, yeah, we're gonna keep it, no big deal. Then they suddenly go, cool, this has value now. We're willing to buy it now. And so
Is that how other business leases work in properties? Let's say you have like a commercial level on the
I
bottom
don't think so.
and like
No,
residential and stuff.
This is different.
It's different.
Yeah. I mean, I'm sure there are other stuff. I would imagine like oil fields and things like that are very similar. I know McDonald's used to buy the land and then give a lease to the franchisee,
Mm-hmm.
and then they would build and do all that stuff. I've talked about, so it happens with land contracts a lot where like maybe you have someone who goes, oh, I don't want to buy the land, but I also don't want to get kicked out in 5 years. So give me a 20 to 50 year lease on this thing with automatic ratchets and all that kind of stuff. So like you've seen some things like that. And that's especially true if they're investing a lot of capital into whatever
business it is.
Yeah. And then I guess if those are the situations, then you could have someone who comes along and says, yeah, I'm willing to buy it for a lump sum
Sure.
and get a guaranteed return over the long haul. My investors are happy because it's low risk. We've got the capital to do it, whatever.
All
yeah. Right. Let's see. What else did I learn? Oh, this one's a new one. So there are some companies where you buy it and it's as straightforward as I just said. Others who go, yes, we're going to buy it for that much, but we're going to actually withhold the first 4 months payments as kind of a repayment type of thing for the transaction costs and whatever.
Huh.
Which I was like,
okay.
oh, so it's not that amount? Like,
yeah, it's like that
weird.
amount minus your cost.
4 months of rent? Yeah, super weird. I think they do that so that it's like the airplane stuff where they can show you a higher number and go, oh, we can get you this big number. I mean, minus some of this here. So it's actually like, so on paper, it seems like it's higher, but in reality, you're like, no, this is actually a lower offer. What are you talking about? And so that was a surprise on me. Like, yep, some of them do that. You really don't find that out until you get your letter of intent for it.
Which at that point, you're still reviewing it and could accept or deny.
Correct, yeah. So. And that's what I have right now. I have multiple letters of intent, and I'm going through looking at those. I also have the actual easement or sample easement documents that they'll be going off of that we'll be talking about.
So there's multiple of these third-party companies.
Oh, my gosh. Yeah, well, I've been talking to like 5 of them.
Oh,
and there's
my word.
Dozens.
Do they get it like into bidding wars and stuff?
Yeah, yeah. Just like normal stuff. Well, and that's actually been
I was under the impression you were talking to an company.
No.
And negotiating back and forth. And
I started by talking to 5, narrowed it down to 2.
Oh, my word.
And it's weird because like they talk about similar things, but the language is slightly different. And so here's one of my learnings that I've got when buying a cell tower lease. Ask for as much information as you can up front. Don't just rely on the phone conversations. Ask them, say, hey, I actually want a written letter of intent. Do the details. Show me some sample documents of what this is actually going to look like when it's all said and done. And what was that? Oh, and then spend the time reviewing their website and about the company just to figure out where they're at. Yeah. Like there's some where this is 100% what they do. They are specialized in this. Yeah. There's others where they're more like broad investors, and this is a part of their portfolio, but they invest in other stuff like, say, notes and bigger buildings and whatever. Some of them are U.S. only. Some of them go international. Right. And some of them have massive $3.5 billion funds. Some of them are a little bit smaller. And so you do your due diligence to again, phone calls are good. They're really important. They're sales calls. And so a big part of what you need to do is ask for all that documentation just so you can review it and compare it and see what's actually up.
That makes
Because
sense.
I had a couple situations where, like there was one where website, super educational, really good, phone conversations, super polite, super nice. They told me a bunch of stuff. It sounded really good. I got their letter of intent, and there were things in there where I went, oh, we never talked about that. And that seems material to me, like that 4-month clawback piece. Or the other ones that I've learned is some of them are like, here's the number, this is the number, deal with it.
Mm-hmm.
Others, no, it's a no negotiation. Like if you come back and say, man, I kind of wish it was a little higher, they go, okay, tell me more. Like, what are you looking to get out of it?
Interesting.
Yeah.
So it's not just a flat
And so,
fee or whatever.
which is hard because United States people don't like to negotiate. And it's just, for me, it was this light bulb like, oh, I get it. This is like real estate. This is a negotiation. This isn't just a number. Like I can push back. I can ask for more. I can see where they're at. And, they're like, oh, I got to take it back to my underwriting department and, whatever, which is fine.
Yeah.
But yeah, it is a
I had
complicated
no
process.
idea.
Let's see.
Does your building have to have certain qualifications like height and size
it has to be able to
to
support a
have
cell
a
tower, right?
cell tower?
Probably. I don't actually know much about that side of things because this already has it. So I didn't go out. But I've got to imagine they've got to have some sort of expectation for coverage on it, in which case they're like, yeah, no, this one qualifies for it. Other things that matter is how fast they can close. So there's 2 things you can do. Like if you already own it, it actually it's more complicated if you already own it and then try to sell it after the fact. It turns out because this easement needs to supersede anything that the bank might have as a lien against it. Because what they don't want to have happen is, let's say you get foreclosed upon and the bank goes, cool, we take everything now. They're like, no, we still have a right to this revenue. The bank can't have that. So theirs needs to be in a senior position to the bank, which they're like, if you do it as a simultaneous close, like they're like, we're fine. Like we can insert it. Banks are cool with it because everyone knows what's happening here. We've all signed off on it. Yeah. If you've already closed, bought it, and then you go to the bank and say, hey, this needs to happen, there's a very special form where essentially the bank needs to give permission for them to be ahead of them. Which I go, it's fine, it's a standard practice, but like not every bank is used to doing that and knows what they're doing, and like it's a thing. And so doing a simultaneous close, like, is harder on one level because it's like, okay, we got multiple people all coming together at the same time. But in some ways, it's easier because everyone's on the same page right out the gate of what's going on. And from what it sounds like, a lot of them like to have like 2 months to close. They can do it in a month. And apparently, if you are like Johnny on the spot, have all the paperwork done, like it can be done in 2 weeks.
Well, yeah, because I mean,
still like never
nothing
happens,
is really changing necessarily.
Just all
like
paperwork.
Material. It's just paperwork saying
and getting lawyers to sign
and
off on stuff and go, yeah, this all looks good.
Right.
So yeah, it's kind of a Wild West, man. That's like
interesting.
It's this weird. Well, it is a Wild West, and it's also this. Turns out it's a thing. Sub industry that is pretty normal. And, and how about this? You can have brokers who represent buyers, just like agents representing buyers and sellers. And then put 2 people together. So like I've talked to some where I'm like, hey, I'm looking to sell this, and they go, sweet, I'll go talk to a bunch of buyers. I'll get a bunch of quotes back from them. Send them to you. Tell me who you're interested in. We'll take the next steps from there, and then they get a commission from that buyer, or from me, I guess, from somebody. The transaction for connecting us together.
On some side, they get a commission.
Yeah. So there's that too.
If you had to estimate,
and none of them are local, by the way.
This is like a random question.
Okay.
If you had to estimate how many cell tower, not cell tower leases necessarily, how many cell towers existed like in Oregon and then in the U.S.?
Jeez.
Like,
well, what I can tell
how
is
many
that
are we talking about?
I know one company owns 2,500 worldwide. Another one owns or whatever controls 1,000 of them in the U.S. alone. I mean, there's a lot of them out there. There's a lot of them. Yeah. And that's just 2.
Yeah.
And
there's hundreds of these companies probably.
Yeah. I would not be shocked to find out that there's like 100,000 cell towers in the world.
Because like for a particular cell tower, what's the typical range that it like covers?
I have no idea. I have no idea.
I guess that
on
maybe
that.
depends on.
Yeah. What I do know is when I flew my drone up at the building to take pictures of it, all legal, by the way, we're all good. When I got near the towers, I struggled to connect to my radio. It definitely had some sort of interference going on, and I would lose signal, and then the drone would be like, going back to home. I'm like, no, and then it would
stay up.
It was
Stay
fine.
up.
So there's
Interesting.
I don't know. Yeah.
Yeah.
It's a lot. What was the other? Oh shoot, I was gonna share something. I forgot now. But yeah, it's just it's an interesting world. For sure.
If you own a tall building, seems like something you would want to know about.
Yeah. So if it was me, if I own a tall building, I'd research, I'd reach out to the different carriers and see what they're at, or reach out to some of these other companies and be like, hey, I'm interested in doing this. Do you want to partner? Like, I'll give you the easement, and then you go off and figure all that stuff out. And I think it's a real possibility for the size of it. Or if you own a piece of land and you're like, yeah, let's build a tower here. Especially if you're somewhere where coverage stinks.
Yeah.
Man, there's true opportunity there for sure.
That's true.
Companies are interested in this. Oh, I remember now what I was going to say. Another factor here that I'm trying to consider is, so Elon Musk's SpaceX has Starlink, which is a satellite version of cell connectiveness.
Okay.
And so the question is, like, everyone had a landline. That was awesome.
Yep.
Now those are slowly becoming less important, and everyone's moving over to these cell towers.
Yep.
The question is, in 20 years, are people going to be like, oh, yeah, we just have satellite, and we get worldwide coverage wherever we're at. No big deal.
Yep.
And so that obviously will affect the value of these cell towers if that turns out to be a thing in the future. Now, obviously, cell companies are trying to do what they can to remain relevant and, like, be like, we're better than them, which is fine, like, as they should.
For now, it probably is, but
yeah,
like you're saying, technology will advance to a point where it's no longer better. So.
Yeah, or it's just you go, yeah, I don't know. It's very straight. It's very fascinating how all that, like, how it all plays into it.
I can see how that plays into the term of your lease too. If you're like,
yeah, 100%.
If technology is going to change, I want the shorter timeline for the lease.
Yeah. So there you go. That's what I've been learning about cell tower stuff and how to kind of look at it from an investor standpoint.
Yeah.
They're not just these. So next time you're in the air and you see, or like you're in the air, next time you see one up in the air, you should be able to think like, oh yes, that is leased by someone, but not necessarily by the landowner. Right. And there is opportunity out there if you know someone who has a cell tower and a lease on it, like, you can talk to them and be like, hey, I'd be happy to help you find somebody, and you can get a little commission out of that. I don't know what I think it falls outside the regular rules of real estate commissions, but I don't know. But yeah, man, it is a crazy world, and one where, again, even if you're looking at a building that has cell towers, this is something that you can think about in terms of the acquisition and how to go about it. You just got to make sure you give yourself enough timelines and get everyone on the same page, especially your lender, on what's going on. So yeah, man, that's cell towers.
Cool.
It's crazy. I spent multiple hours on the phone today talking with people, finalizing details, figuring it all out. Yeah, it is. It's
sounds like a process.
Yes, it is a process. I've been working on it for like a month.
Wow.
And so that's the other one, is like, give yourself time to figure it out, because there's just, the learning curve is unbelievable for it. I still don't know everything.
Totally get it.
But there you go. But there you are. And so if you enjoyed this podcast, we'd love it if you gave it a thumbs up wherever it is that you listen. And if you are interested in learning about investing with us in things like this type of project and other fun stuff, you can check us out at furlo.com. Thanks for listening, and have a great day.